Hey everyone, and welcome back to
Yeah.
the Deep Dive. Today we're going deep, really deep, into the world of market psychology.
Oh,
Yeah,
uh-huh.
buckle up. We're going to be using an article from Binance Academy
Okay.
called The Psychology of Market Cycles. And this article, it looks at how, those emotions and that crowd behavior
Right.
really can impact, market trends.
Yeah.
So, even if you're not, a hardcore investor,
Yeah.
this stuff can be, surprisingly useful
Yeah,
because
that's so.
it really helps us kind of decode, how people make decisions, especially under pressure.
Yeah. It
So,
can be no pressure these days for.
yeah, we've all been there, right?
Yeah.
So,
This is a good one. This is interesting.
yeah, it's a good one. So let's jump in.
So what's interesting here is that people often assume the market is, purely rational. Like it's all
Yeah.
driven by, numbers and logic, and that's it.
Yeah, you'd think it'd be all, spreadsheets and algorithms,
Right. Exactly. Yeah.
But we know humans are a little bit more complicated.
Humans are a little more complicated than that.
Yeah, yeah.
Yeah. And what we're going to be looking at today is
Yeah.
how those emotions and those psychological forces
Yeah.
become one of the, or are one of the driving factors behind the trends we see.
Yeah, so let's I guess let's start with the basics.
Okay.
Like what exactly is market psychology?
Right.
I mean, is this like some sort of mind-reading trick that investors use?
Not quite.
Okay.
It can feel like that sometimes.
All right.
But essentially market psychology is really
Yeah.
looking at how, or the idea that market movements
Oh.
are always driven by just pure logic or the actual value of something.
Right.
It's the emotions of
Yeah,
all the
well-
traders that are involved, the collective emotions
Yeah.
that can sometimes make things really interesting.
So it's like the market has its own mood swings then.
You could say that, yeah.
Okay.
I mean, think of it like, a crowd at a concert.
Right.
If one person starts getting really excited,
Uh-huh.
that can be contagious, and pretty soon the whole crowd's going wild.
Right, right.
Well, the same thing can happen with fear. So if enough people start panicking, that can kind of create a domino effect.
I can see that.
Yeah,
Yeah, and I guess that kind of plays into that whole bull
it does, yeah.
market versus bear market thing.
Absolutely. So a bull market, which is also called an uptrend,
Yeah,
is essentially where things are, generally optimistic.
right.
There's this confidence in the market, maybe even bordering on greed sometimes.
Okay.
And that just kind of drives those prices up and up and up.
And that's what we saw in 2017 with the Bitcoin boom, right?
Yeah.
The article mentioned how it went from what, $900
Yeah, around there.
to $20,000, which is
Yeah, that was a big one.
insane.
It is. It's a textbook example of that.
Wow.
Powerful upward momentum. Yeah. But as we know, what goes up
Must come down.
must come down. And that's when we see the bear market come in, or the downtrend.
Right. And that's when all that anxiety and that fear starts to take over.
Yeah, then the mood kind of shifts.
Yeah, I remember that crash after the Bitcoin peak.
Oh, yeah.
It was brutal to watch,
It was pretty brutal.
especially for all those people that bought at the top.
Especially, yeah, the people that bought in at the top.
Yeah. Ouch.
Yeah, it just goes to show how quickly sentiment can shift.
Yeah.
1 minute everyone's euphoric,
Right.
and the next minute they're running for the exits.
Yeah, like a roller coaster.
Yeah, exactly. It's a roller coaster ride.
So walk me through this cycle a little bit. We
Okay.
start with that uptrend,
Yeah.
fueled by all that optimism and excitement.
Yeah.
But then things can get a little too exciting, I guess.
They can, yeah.
Right.
And that's when we often see, the fear of missing out,
Right.
the FOMO starting to kick in.
Right. People see those prices rising and they don't want to be left behind,
Yeah.
so they jump on board.
Yeah.
And often, maybe without fully thinking things through.
Yeah, it's a powerful emotion.
It's a powerful emotion.
Yeah.
Yeah. And it can almost become like a feedback loop, right?
Yeah.
So that greed fuels the price increases, which fuels more greed,
Yeah.
and so on.
Yeah.
And this could actually push prices beyond,
Okay.
what would be considered rational or sustainable.
So it's getting risky.
Then it starts to get a little risky.
Okay, and I'm guessing that's where we hit the peak.
Yeah, the peak is basically
Okay.
the point of maximum financial risk.
Right.
It's that top of the roller coaster.
Yeah. Right.
Thrilling for a moment,
Uh-huh.
but you know that the only way from there is down.
Yeah.
Sometimes we might see a sideways movement after the peak, kind of like a pause
Okay.
as some people start to get a little cautious,
Uh-huh.
and that's what's called distribution.
But then those doubts start to creep in.
Yeah.
And then the downward slide begins.
Right, right.
So first, there's kind of that shock, like, wow, the upward trend might be over.
Oh, yeah.
And then there's the denial, like,
Yeah.
no, it's going to turn around, it's going to turn around.
Right,
But as those prices keep falling, the anxiety starts to set in.
right,
And then it turns to fear
right.
as those losses start to become more and more real.
Oh, yeah.
Yeah.
Ouch, that's rough.
Yeah, it can be rough.
Is that when people start to, I guess, like, hit that panic button?
Fortunately, yeah.
You know,
That fear can lead to what we call capitulation,
capitulate.
which is essentially, people giving up,
Right.
selling off near the bottom, just trying to cut their losses,
Yep.
driven by that panic,
Oh,
the urge to escape, the pain of watching everything kind of dwindle away.
Yeah.
Yeah.
So we hit the bottom of that cycle. Everybody's feeling pretty gloomy.
Yeah, feeling a little gloomy.
What happens then?
Well, then, slowly but surely,
Okay.
a sense of hope starts to kind of emerge. And prices, maybe they stabilize a bit. Maybe they even start to creep back up a little.
Okay.
And people start to think, okay, maybe, just maybe, the worst is over.
Yeah.
And that little spark of hope
Right.
is what eventually leads into that next uptrend.
So it's almost like this, I don't know, it's almost poetic,
It is. It is.
this cycle
Yeah, it's cyclical. It's a cycle.
of emotions.
It is a cycle of emotions, yeah.
But why should the average person even care about this?
Yeah, that's a good question.
I mean,
Or-
not all of us are day traders, so
Yeah, not all of us are day traders. That's true.
yeah, so why should we care?
Well, you might be surprised
Right.
how relevant this stuff can be to your everyday life.
Really?
I mean, it's not just about, stocks and crypto. Understanding these cycles can actually help you make smarter decisions in all sorts of situations.
Okay.
I mean, like, think about buying a house or
Right.
starting a business,
Yeah.
knowing kind of the overall mood,
Okay.
the emotional climate of the market
Right.
can really give you an edge.
Interesting. So it's not even just about the stock market. It's about
Yeah.
just kind of being aware of the overall mood.
It's that awareness, yeah.
Yeah.
Having that extra layer of awareness and
Yeah.
understanding how emotions are influencing those big decisions.
Got it.
Yeah.
Okay. I'm starting to see how this could be useful.
Good.
But how do we even start to, I guess, like, spot these shifts, these emotional shifts in the market?
Right.
I mean, is there like a secret formula or something?
Well, there is a whole field called technical analysis,
Okay.
which tries to kind of gauge market sentiment using various tools and indicators.
Okay.
We're not going to get...
Don't get too technical on me.
Okay. But there are some basic tools that even, a novice investor
Yeah.
could use to get a sense of what the market is feeling.
Okay, now the article did mention a couple of these tools,
Yeah.
RSI and Mass CD.
Right.
Can you just give us a quick, rundown of what those are?
Yeah. So think of them as tools, but try to measure
Okay.
the strength of the market's current trend.
Okay.
For example, RSI,
Uh-huh.
which stands for Relative Strength Index.
Okay.
That looks at the magnitude of recent price changes
Okay.
to evaluate if a stock or whatever asset you're looking at is overbought or oversold.
So if the RSI is like really high,
Yeah.
does that mean that the market's maybe getting a little too enthusiastic?
It could be a sign, that a correction might be coming.
Okay.
It doesn't give you a definitive answer,
Right.
but it offers some valuable clues.
Okay.
Another one is MCD,
Right.
which stands for Moving Average Convergence Divergence.
Okay.
And it uses moving averages.
To signal potential changes in trend.
Okay. And what kind of signals would we be looking for there?
Well, MaxED can help you identify, potential buy or sell signals
Okay.
based on kind of crossovers of its different lines.
Okay.
Again, not a crystal ball,
Right.
but it can give you a sense of whether the market's gaining or losing momentum.
Yeah. Okay. So these tools are essentially like trying to measure the emotional temperature
Yeah.
of the market.
You could say that, yeah.
Okay.
They can kind of tell you if the market is feeling hot,
Okay.
like things are maybe getting out of control, or if it's cool,
Yeah.
like things are calming down.
Okay.
And maybe there's a shift on the horizon.
Got it.
Yeah.
Okay. That makes sense.
They kind of help you see beyond
Yeah.
that day-to-day noise
All right.
and get a sense of the bigger picture.
This is all starting to come together now.
Okay, good.
I think it would be helpful to go back to that Bitcoin example again.
Because it really does highlight how emotions can really drive those
Yeah.
market swings in such a dramatic way.
Yeah. And remember,
Yeah.
the underlying technology of Bitcoin didn't actually change during that crazy ride.
Right.
What changed was the narrative surrounding it, the emotions.
Yeah.
And that's what fueled those incredible price swings.
So it wasn't about like, the actual,
Yeah, the fundamentals.
the fundamentals of it.
Yeah.
It was about the story that people were telling themselves.
The story, yeah.
Yeah.
The hopes and the fears that they were kind of projecting onto it.
Right. Right.
Yeah.
Wow. That's pretty powerful.
It is powerful.
So it really does become it's a self-fulfilling prophecy almost.
It can be. It can be a self-fulfilling prophecy.
If enough people believe something's going to happen, then their actions driven by that belief are actually going to make it happen.
Exactly. Yeah.
Wow, that's really interesting.
It's a very powerful concept.
Yeah, that market psychology isn't just some sort of abstract concept.
Yeah, it's human nature.
That's human.
Yeah.
It's us.
It's us. Yeah, we're all part of it.
And speaking of human nature,
okay,
there's this other layer to this whole thing, right?
Yeah.
Cognitive biases.
Yeah, we haven't even gotten to the cognitive biases yet.
Well, let's dive into that.
So cognitive biases, they're like these little glitches in our thinking that everyone has,
So like blind spots.
Yeah, blind spots, you could say.
Okay.
And sometimes those blind spots lead us to making decisions that, well, maybe aren't in our best interest.
Now I'm a little worried.
Yeah, it's good to be aware of them.
Yeah.
So some examples of cognitive biases and how they play out in the market.
Yeah, let's get into some specifics.
Yeah, let's start with confirmation bias.
Okay.
And that's that tendency to seek out information that confirms what we already believe.
Right.
Even, even if there's evidence to the contrary. Oh, I know people like that.
We all do it to some extent.
Yeah.
But it can be especially dangerous in investing.
Okay.
I mean, imagine you've bought into a certain stock.
Right.
You're convinced it's a winner.
Uh-huh.
Confirmation bias can make you overlook any warning signs or, even interpret bad news in a positive light.
Yeah, they're just doubling down no matter what.
Exactly.
So how do we avoid falling into that trap?
I think the key is to actively seek out different perspectives.
Okay.
Don't just read articles or follow analysts that just reinforce what you already believe.
Right.
Look for information that challenges your assumptions.
Even if it's uncomfortable.
Even if it makes you a little uncomfortable, yeah.
So expose yourself to different viewpoints.
Yes, exactly.
Okay.
And don't be afraid to change your mind if the evidence suggests you should.
Right.
Being flexible is so important.
Okay, that's confirmation bias.
What about loss aversion? I think we touched on that a little bit.
We did. Loss aversion is the idea that, the pain of losing, let's say, $100 feels much worse than the pleasure of gaining $100.
Okay.
So it's like our brains are wired to avoid losses more than they are to seek gains.
Okay, so how does that play out then?
In the real world.
Yeah, in the real world.
Yeah.
Outside just, the stock market.
In the real world, yeah. It shows up in so many ways.
Okay.
Think about negotiations.
Okay.
Sometimes people hold on to a bad deal longer than they should simply because they don't want to accept a loss.
Right. They don't want to admit defeat.
Yeah, even if it means missing out on a better opportunity down the line.
So we're kind of programmed to play it safe.
In a way, yes.
Even if that's not really the smartest move in the long run.
Right, and it's an evolutionary thing.
Okay.
Back in the day, a loss could have meant starvation.
Right.
So our brains developed this bias to help us survive.
Okay.
But now, in today's world, it can hold us back sometimes.
So how do we break free from this then, this loss aversion?
I think one strategy is to kind of reframe how you think about risk.
Okay.
So instead of focusing on, the potential loss, try to focus on the opportunity cost of not taking action.
So weigh the potential downside against the potential for reward.
Exactly.
It's about looking at the bigger picture.
Looking at the bigger picture, yeah.
Okay, that makes sense.
Sometimes a calculated risk, even if it comes with the possibility of a loss, can lead to much bigger rewards.
In the long run.
In the long run, exactly.
Okay.
Let's see, another one.
What about the endowment effect?
Oh, the endowment effect.
Yeah, we haven't talked about that one yet.
Right, the endowment effect.
Yeah.
It's that tendency to overvalue something just because we own it.
Right, like those old clothes in my closet that I swear I'm going to wear again someday.
Yeah, we all have those.
Yeah.
Or that, that gadget you haven't used in years.
Right.
But can't bear to part with.
Yeah, it's a quirk.
It's a quirk of human psychology.
Okay. So how does that play out in the market?
Well, investors can become overly attached to their holdings.
Well,
Even if, the market is telling them it's time to sell,
hmm
they might refuse to acknowledge that the value has dropped
right.
simply because they're emotionally invested in it.
So again, how do we avoid letting our emotions kind of cloud our judgment?
I think it's about learning to detach ourselves emotionally
Oh,
and to view things more objectively.
right.
Try to see your investments, for what they are.
Okay.
Assets that
Yeah.
can either appreciate or depreciate.
Well,
Don't get caught up in the story you've built around them.
so separate the sentimental value from the actual market value,
Exactly.
which is good advice for my closet too.
Yeah, for your closet too.
Okay.
Exactly.
Okay, so we've talked about confirmation bias, loss aversion, endowment effect.
Those are some of the big ones.
Are there any other
Oh, there's more.
okay, sneaky cognitive biases?
Oh yeah, we've got to talk about the bandwagon effect.
Bandwagon effect. I feel like I've heard that before,
Yeah,
but I'm not
yeah.
sure I
It's
totally.
a classic. So the bandwagon effect,
Okay.
it's all about that tendency to do something simply because everyone else is doing it.
Right. Okay.
We're social creatures.
Uh,
We look to others for cues on how to behave.
right.
And
So
so,
it's kind of like that FOMO feeling,
yeah, it's like FOMO,
but on like a bigger scale.
but on a bigger scale, exactly.
Okay.
So think about those, those viral investment trends you see online
hmm
where everybody is suddenly piling into a particular asset
Right.
without really even understanding what they're buying.
Yeah, yeah.
They don't want to be left out. And this can lead to some pretty, risky behavior.
Especially if the trend is not based on anything, like statistically.
Exactly. The bandwagon effect can actually create those bubbles
Oh, wow.
where prices get inflated way beyond
Yeah.
what's reasonable.
Okay.
And as with all bubbles,
Right.
eventually they burst.
So how do we resist that urge to jump on the bandwagon,
Yeah.
especially when it seems like everyone else is making money?
It comes back to, independent thinking,
Okay.
critical analysis.
Right.
Do your own research, understand what you're investing in.
Don't just follow the crowd.
Don't blindly follow the crowd, no matter how tempting it seems.
Yeah, okay.
Be a savvy investor, a critical thinker,
Not just a follower.
not just a follower. And that applies to,
Life in general.
all areas of life, not just finance.
Yeah, that's a good point.
Yeah.
These cognitive biases, they're not just in the stock market.
They're everywhere.
They're in our relationships, our careers.
They influence everything. They're a fundamental part of how we process information
That's fascinating.
and how we make decisions. Yeah.
Okay, so we've talked about market cycles,
Yeah.
those emotional, roller coasters, and now all these cognitive biases.
Yeah.
Is there anything else that you think we should touch on
Well, I think we should
before we wrap up?
yeah, there's definitely more.
Okay.
One concept we haven't really touched on yet is this idea of
Okay.
self-fulfilling prophecies
Self-fulfilling prophecies in market psychology.
in market psychology. Yeah.
Okay. Now that sounds intriguing.
It's a fascinating concept.
All ears.
So think about it this way. If enough people believe that something's going to happen in the market,
Okay.
their actions based on that belief
Uh-huh.
can actually make it happen.
So it's like this collective mindset that can actually shape real-world outcomes.
It really is.
Whoa, that's kind of mind-blowing.
It is. It's pretty wild.
Yeah.
I'll give you an example. Let's say a rumor starts circulating that a certain company
Okay.
is about to release, some game-changing new product.
Okay.
Now, if enough investors buy into that rumor
Uh-huh.
and start buying up the company's stock,
Right.
the price is going to go up.
Yeah.
Even if there's, no official announcement or
Right.
confirmation.
Right. So it's pure speculation at that point.
It's all based on speculation.
Right.
And that price increase fueled by,
Yeah.
excitement speculation, that can lead to even more buying.
It's like a snowball.
Exactly. It snowballs.
Wow.
Yeah. And that FOMO kicks in.
Right.
People see the price going up.
Yeah.
They don't want to miss out on those potential profits.
Right. Right.
So they jump on board, and that drives the price up even further.
Wow. So the initial belief, even if it's based on bad information or
Now,
whatever,
it doesn't even matter. It doesn't even have to be accurate.
it creates this
Yeah.
chain of events.
Yeah, a self-fulfilling prophecy.
That can really push the market
Yeah.
in a particular direction.
That's the power of belief.
So in a way, sentiment can actually shape reality when it comes to the market.
Yeah, I mean, to a significant extent.
Whoa,
I think so.
that's pretty powerful.
It It really is. And that's why it's so important to kind of be aware of those prevailing narratives, the
Yeah.
stories that are driving that market sentiment.
It's like you have to understand the psychology of the crowd.
Yeah,
If you can figure out what's motivating them, what they're reacting to,
exactly.
you can kind of start to anticipate their behavior.
It's all about reading those signals,
Okay.
understanding those underlying emotions.
Okay, this is making sense, but it's also a little overwhelming.
I know, it's a lot to take in.
Like, how can the average person even keep track of all these different factors?
Right.
The emotional cycles, cognitive biases, self-fulfilling prophecies.
Yeah, it can feel like a lot.
It's a lot.
But remember, you don't need to be a psychologist
Okay.
or a market expert to actually benefit from this knowledge.
Yeah.
The key is to just be aware of these forces,
Right.
to recognize their influence on your own thinking
Okay.
and on the behavior of others.
So it's really about developing that awareness, that sensitivity
Yeah, that sensitivity.
to those emotional undercurrents that drive so much,
They really do.
not just the market, but life in general.
Exactly. Exactly.
Yeah.
And, the more you learn about market psychology,
Uh,
the better equipped you'll be to navigate those currents, to make those informed decisions,
yeah.
and maybe even anticipate those shifts.
So you can ride the waves instead of getting swept away by them.
Exactly, ride those waves.
I like that. That's a good analogy.
Yeah.
Well, I think we've covered a lot of ground today.
We have.
We started with the basics of market psychology,
Yeah.
explored those ups and downs of the emotional cycles.
The emotional roller coaster.
Yeah, learned about all those sneaky cognitive biases.
Oh, yeah, those sneaky biases.
That can trip us up.
Yeah, they're everywhere.
And even touched on those, the power of narratives,
Yeah, the narratives.
self-fulfilling prophecies.
Yeah, self-fulfilling prophecies.
And we did all of that, really, just using that one insightful article
Just one article, yeah.
from Binance Academy
That's all it took.
called The Psychology of Market Cycles.
It's a great resource.
It is. It is a great resource for anyone who wants to kind of, keep learning about this topic.
Keep learning, keep digging deeper.
Yeah. So as we wrap up this deep dive into market psychology,
Right.
what's the one key takeaway you want to leave our listeners with?
I think the most important thing to remember is that markets are not these purely rational entities.
Okay.
They're driven by human emotions,
Right.
by beliefs, by stories.
It's us.
And understanding their psychological forces, it can give you a real edge.
Whether you're, an investor, an entrepreneur, or just,
Just trying to make sense of the world.
living your life. Yeah.
Yeah.
It's a good reminder that we're all part of this,
We
this
are.
intricate web
We're,
of human psychology.
we are all connected.
Yeah. And understanding that web.
Understanding ourselves
Yeah.
and understanding others.
Can really help us make those smarter choices.
Smarter choices, avoid those pitfalls.
Yeah. Avoid those mental traps that can,
Yeah,
lead to those costly mistakes.
they can be costly.
All right. Well, I encourage everyone listening to keep exploring this fascinating world
Keep exploring.
of market psychology.
Yeah, it's a journey.
Yeah.
It's a journey of self-discovery.
That's a good way to put it.
As much as it is about understanding the market.
Yeah. It's about understanding ourselves.
Yeah.
All right. Well, thanks for joining us on this deep dive, everyone.
Thanks for listening.
Until next time, keep exploring, keep learning,
Keep diving deeper.
and keep diving deeper into the fascinating world of knowledge.